What is good, guys? It's Rey-Jay back with another video, and in this one I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers, and break down what's happening with the economic calendar moving forward, what's going on with other factors involving the market, so what you should be watching for as time progresses. But before I begin the devil's information, before I get into any more details, let me just mention a couple of things. I am personally not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link, which is down below and in the description. If you sign up for Moomoo and deposit $100, you're guaranteed 7 free stocks, and all friends in just 14 days. Anyways, for the market, I just want to say that right now, SPY is broken this resistance right here, which is showing some very, very nice amounts of strength. Then we ended up testing this next resistance zone up here, which is where we have a lot of sellers that are trying to kind of defend, but it's not really enough for them to really stop SPY at this particular level. So the question is, will we continue to push tomorrow? When is CPI coming out, and how could this end up affecting the markets? So tomorrow, 1 hour before the market opens, tomorrow being Wednesday, May 15th, by the way, at 8:30 a.m. Eastern Standard Time, we have the CPI data report coming out. This is going to determine if SPY continues to pump or if we're about to get a big rug pull. And it's very, very important. Now, PPI came out today. I just want to note that PPI was a little bit hot. It's not the best of signals for CPI, but we'll just have to wait and see how things look. Month over month PPI and core PPI were actually hotter than expected by quite some margin. I mean, you can see we were at 0.5% of an increase. It's a little bit harder than what we saw previously, despite the fact that year over year core and all excuse me, all items PPI were as expected. So that's very important, showing increases month over month. For CPI, which is coming out for tomorrow, I just wanted to say that we're expecting core to be around 0.3%. If it's harder than that month over month, that's going to not be the best of signs. If it's close to that or below that, that's going to be decent. For core CPI year over year, we want this to be around 3.6 to 3.7%. If it's harder than that, it's not going to be the best of signs as well. So watch for that. For inflation month over month, we want this to be 0.3 to 0.4%. And then year over year, we want this around, for all items, 3.4 to 3.5%. If we get harder numbers overall, based off the weight, that's not going to be the best of news for us. If the numbers are decent, this could be, once again, decent for the markets. The markets could continue to push. Now, when Jerome Powell gave his speech today, the guy contributes to why the market ended up pushing. The guy was just continuing to do his normal, his typical speech. A lot of it was just, in my opinion, very manipulated. And I just want to make it very clear that he could have been much more hawkish. The guy chose to just kind of play things off. He chose to be a lot more dovish. I don't think that it's really clear for us to truly say that. So he said that the economy is in a good place. The labor market is holding up well. He mentioned that he's still very confident the Fed is going to meet their long-term targets, but he did mention he's not as confident about the short term for inflation. I personally think that he should have been talking more about how the Fed has to be careful, because we have to wait and see what the data tells us before we can really say that everything is going to be just fine. And with the interest rates potentially being held for higher for longer, right? That's not the best of news for the market either. There's no telling if he could truly say that things are going to be fine and they're projected to be fine. Because once again, we are seeing contraction amongst earnings. We're seeing contraction amongst the demand in our economy from the consumers, and inflation is eating away at people's overall spending capabilities. As Americans are trying to kind of limit spending to some extent, this could also affect businesses and our entire economy. So I kind of feel like, in my personal opinion, Jerome Powell may have not been as truthful as he could have been. I think that a lot of what he said was just, trying to hold the market up, and him just trying to keep everyone as calm as possible without kind of accounting for the full bigger picture. That's personally how I kind of see what he's been saying. But anyways, that's part of why the market is still holding up very well. And now CPI, when it comes out, that's going to have another big effect on how we end up moving. So with CPI, we got 0.4% for February and March month over month. That's the 1 month percent change. So we actually saw some increases moving forward. And the last pieces of data were not the best. So you can see that all items CPI has been going up quite a bit, especially for March. And then for all items without food and energy, it's been kind of stagnant. So that's very important, something worth noting. Now, one thing worth noting is that gas prices, they've been about the same relative to the previous month. Last month, they were about $3.63 for regular gasoline. That's the average price. And then for the current average, it's about $3.61, so almost the same. And then everything else from mid-grade to premium and diesel were all essentially the same as well. Very, very close to what we saw during the previous month. So that is a sign that CPI could be very close to what we saw previously. Also, with these like gas prices right over here, we can see there's a slight increase, at least for April. It went down a little bit in May, but it's still very, very close. Not really much of a change. So we'll see how that ends up affecting CPI. Right now, the market is very optimistic. It's getting very excited. We're seeing greed taking over, and we're almost very greedy in terms of our overall sentiment. Market momentum is also very greedy as we're seeing buyers stepping in, and that's making up the majority of our volatility. And then the puts and call options positioning is very greedy right now as well, because we're starting to see puts being closed. We're starting to see a lot more buyers stepping in, and they're continuing to do what they have to do. So with that happening, and with a lot of delta hedging and call buying and share buying that's happening right now, the market's getting pushed higher and higher. Whether this continues will depend on other factors. The VIX failed to get a breakout. It's just kind of stagnant right now. And we'll have to see if we end up coming back down to fill a gap, because we have a big gap below. This could be bullish for the markets if it continues to fall to fill its gap. Excuse me. For earnings, we had new just announced its earnings and very, very minor earnings after that. For Wednesday, we have Monday.com, Dole, and a few others. For Thursday, we have Walmart, John Deere, JD.com, and a few more retail. And that's pretty much it for earnings. It's very, very minor this week, nothing too crazy. News earnings were in line with Q1 expectations, nothing too crazy. We actually saw decent revenue overall with an EPS of about 8 cents, which is in line with estimates. But when it comes to their overall projections, they're not the strongest. They're just kind of so overall. So I would say earnings were so for the company. That's why the share price is flat right now. With that being said, let's break down the charts. What do I see happening to the markets? I'm also going to talk about AMC and GameStop towards the end. So just pay attention to those if you guys are interested. I'm going to just continue from here. So for SPY, this thing actually broke the resistance at 522.6. And I just want to say and be honest with everyone that looking at the state of the economy, things are not that great, at least based off how I'm projecting things. Right, we have high interest rates. A lot of regional banks are not doing as well, at least behind closed doors. They're taking on more debts to kind of alleviate the current status of things. That's kind of like another topic for another day, because I could go into a lot more detail about that. And then we also have a lot of other things going on right now. Uh, right now, the market's just looking at inflationary data. It's also listening to what Jerome Powell's been saying about how the Fed has everything under control, things are fine, this and that. So the market is still holding up. And could the market continue? Yes, it could, because of manipulation and other factors like that, in my personal opinion. Now, this could change depending on something like CPI. So you have to be very open minded nonetheless. But just know from a technical standpoint, based off technicals, based off the charts, we are looking more bullish. I'm going to be 100% honest with everyone. So looking at this, SPY has support at 522.6, 521.5, and then 520. If we get a hot CPI, if the numbers I called out earlier are hot, okay, if CPI is bad, that means it's hot, that could cause SPY to retrace back down to 520, if not 518. If CPI is decent, okay, and looking at gas prices, they're about the same as before. One thing about CPI is that it's very manipulated. So I'm not trying to say that the data is real or I trust every single thing about it. I'm just trying to say that we have to go based off the data from what we're seeing. So if they give us some decent numbers, SPY could go higher. Okay, we could be approaching 525 if we break this high of the day today. And if that breaks, there's no telling how high it could go. It could get very close to 530 if we break the all-time high. It's very manipulated, guys. Lots of manipulation, despite what we were seeing. Despite the fact that we got a hot PPI report, despite the fact that inflation is going up, Jerome Powell's little speech helped save the market to push all the way back up with his words and what he was trying to BS in front of investors. That's what's helping us so far, and it may continue on this trend if we get a decent CPI. Just wanted to make that as clear as possible. So we'll see what CPI causes. As of right now, the chart looks more bullish for SPY, but we'll just be open-minded just to be safe. How about for Tesla? If we get a decent CPI, if CPI is okay and the numbers look decent, this breakout could continue and Tesla could easily continue higher towards 182 plus. If CPI is hot and not good numbers, right? Tesla could retest its 200 EMA at 176, then start tipping all the way down to the 172 area if we get a rug pull. Overall, the technicals look bullish on Tesla. We got a big bar to the upside. We're seeing a nice inverse head and shoulders breakout, and we broke this resistance at the white trend line. So if you look at this white trend line, we hit this trend line, rejected, hit it again, rejected, and now we're trying to break through it. So the chart looks more bullish in my personal opinion for Tesla, and I think that there is more potential for this to go higher. Now, we'll see what CPI causes, so always be open-minded, okay? You always want to be unbiased when it comes to the way you look at stocks, but just know that technicals do look more bullish for Tesla. For Nvidia, it's the same thing. Nvidia managed to break past 908 and close above it. So our next target, if we keep pushing, is going to be 920, the 921 to 920 area. If we lose 908, we're going to be looking at 900, then about 892. We have a nice inverse head and shoulder structure, and we're getting a bullish cross in the PPO. So in my personal opinion, the odds favor more upside for Nvidia. If we continue to push, we're going to be looking for 920. I do favor that a bit more. But it also depends on CPI. If CPI is hot, we could lose 900 and start dipping back down to 892. But the chart is saying it wants to go up to 920. It looks more bullish by a lot more signals. So it looks bullish to me. I do favor the upside a bit more. For the QQQ, if we break through 446, we're going to be looking for a push towards 448 and 450. If we reject off 446, we're going to be dipping back down towards 442. I favor it's going to be pushing all the way up towards at least 448 and 450 as we have bullish cross on the PPO coming. And we got good volume today. So the volume is starting to go up again. And I do see potential for us to get very close to the all-time highs. The chart favors that, but we can't make any promises until we see CPI. Apple's also looking more bullish in my personal opinion. It's approaching the 188 resistance. If it breaks this, we're easily going to be pushing up towards that 190 area. If we lose 187, we're going to be dipping all the way down towards 185. But the chart, in my personal opinion, favors the upside even more. So 190 is a strong possibility for Apple. It's looking more bullish to me. NIO has a big event coming out. They're announcing their new sub brand. This looks bullish. If it looks like it could be heading towards $6. Just wanted to call that out. And with that being said, guys, I've gone over the main five I typically go over. Now let's just focus on the other charts that we have right here. How else could they be impacted by CPI? So if we get a hot CPI, Palantir will dip towards 21 flat. If you get a decent CPI, we're going to be looking at 21.8 and eventually a test of the 200 EMA at 22.2. In my opinion, with an inverse head and shoulders like structure, nice big green bar, the odds do favor trying to push to at least 22 and maybe get to 22.2, the 200 EMA test for a breakout. This looks more bullish to me. For Supermicro, in my personal opinion, if we get a hot CPI, we're going to be losing 800. If that fails us, we're going to be dipping lower. And if we break out, we're going to be looking at the 200 EMA at this 840 resistance. If we break that, we have an imbalance to fill all the way up towards 860. I favor that, with this trend change, we have this low right here at 707, came up, made a lower high, made a higher low, excuse me. Then we could break out a little bit higher. So it does start to look a little bit more bullish when you see that. So I see potential for it to actually test our 200 EMA and go up to about 840, but this also depends on CPI, so we'll just have to wait and see. For Rivian, the chart is also starting to uptrend. Got a nice little push today, came down again. We could be retesting previous support becoming resistance at 11. If we hold 11, look for a big rebound and then push towards 12 again. If we lose 10.75, we're going to be dipping all the way down towards 10.1. I favor that's going to kind of dip a bit and start pushing higher as it looks a bit more bullish. For SoFi, we have a nice imbalance to fill all the way up here at $8. The chart is looking a bit more bullish, might retest our 200 EMA. If we lose 7.4, we're going to be dipping all the way down to 7.2. If we hold it and rebound, we're going to be looking for 7.8 at the least, and then even higher levels. The odds favor the upside, in my personal opinion. For the IWM Russell 2000, we are on a nice uptrend right over here. We're currently testing this 207.5 resistance. If we continue to push thanks to CPI, we're going to be looking for 208 plus. Then eventually, there's another imbalance to fill all the way up towards 211. So we're going to be watching to see if we could get to at least 208. If we end up turning bearish, we're going to be sinking all the way down to 205. If that fails us, we're sinking down to 202. This chart looks like it wants to push higher from a technical standpoint, so that looks more probable. But don't forget, it all depends on CPI. For AMD, if we're bearish, you want to see it lose basically the 20 EMA at 152. If we lose this, we're going to be dipping all the way down towards 150. If we're bullish, you want to see it basically break and hold above our 153 resistance, which is currently at our 50 EMA. If that breaks, look for 156. This chart favors upside. I think 156 is more probable, so we'll have to see if that ends up being the case. Let's see what else is there. We have ARM. ARM, in my personal opinion, is looking a little bit more bullish. We have a nice little flag that's forming. If we were to turn bearish, if CPI is really hot, we could retrace back down to about 111. That's where our 200 EMA happens to be. If we're bullish, it's going to be pushing up to fill this imbalance all the way up to 120. I could see it going up to 120 if it keeps pushing. Coinbase came down, but then we start to see this rebound a bit, so we're going to be watching resistance. If we're bullish tomorrow, we have an imbalance to fill all the way up to about 215. If we're bearish, it's going to be rejecting off 206. We're going to get a rejection, start sinking back down to about 198. The odds favor this trying to rebound a bit. For Amazon, we have resistance at 187. If we're bullish tomorrow thanks to CPI, it has to break 187, start pushing for 190. If we're bearish, we got to reject here and retest 185. If that fails, we're going to be dipping. This looks like it wants to turn upwards, so watch for that very carefully. For Meta, we're kind of stuck between a range right here. We have 472 as resistance, and we have 466 as support. If we break this resistance, we're going to be looking for an imbalance fill towards 475. That's if we're bullish and Meta starts pushing things to CPI. If it's the opposite, if this is like a head and shoulders, because this could also be a trap, guys. A lot of head and shoulders this year have been traps. You want to see it lose 166 to turn bearish. This chart looks like it wants to push a little higher, but I'd be very careful with the head and shoulders. So just wait and see what CPI brings us. I'm going to be very patient as well. For Microsoft stock, Microsoft has been very, very indecisive. It's been just trading sideways within this range, back and forth price action. We have 417 as resistance. Our support's at this 410 area. It's been stuck like this for about the last 3 weeks. So I'm going to be very patient and see, do we get a rug pull back down to 413, start sinking, or are we about to break out towards 420 plus? We'll wait and see what CPI brings us. It's always very important to be patient. Google's looking more bullish right here. If we turn bearish, however, because CPI is hot hypothetically, look for 170. If we're bullish, you want to see it break through 172 and start pushing higher. I personally say that this looks bullish. We have a nice symmetrical structure developing right here. This could actually push up towards, I would say, 173. So Google looks more bullish to me. I think Alphabet has potential to push higher. For GameStop, in my opinion, is in a very, very interesting place. So we had a lot of halts that really hurts the momentum, and we're gonna have to watch and see if volume kind of maintains. It may attempt to get back up to about $60, but I'm not sure if it's gonna hold that because there's now weakness on the chart after what just happened with all these halts. So look for a test of 60. We'll see if we get a little rejection or not. And then we might be making our way back down lower, or we might break through it. So I'll just have to wait and see. But I do see it pushing a little bit higher towards 60. I think AMC could try to retest, in my personal opinion, this 9 area. But even if it hits 9, it could get a big rejection after that. So we'll just have to wait and see what happens with momentum and volume after all the halts. And just be careful, guys. With all these halts coming, that does tend to lead to some slowdowns. You have to be very, very mindful of that. And we'll have to see how things end up progressing moving forward. With that being said, guys, I just want to make it very clear that at least how the market's moving, things are in some very, very critical positions, and we just have to be open minded no matter what ends up developing, at least for now. So with that being said, I think I went over the majority of technicals. I think I'll just kind of conclude the video from here. I just want to make it very, very clear that at least for the markets, the entire market, from the VIX to the dollar index and etc., everything's going to be reacting to what we get from the CPI report. That's coming out at 8:30 a.m. Eastern Standard Time. So I'll be back tomorrow morning to talk about what I see in the numbers. And please remember that the numbers are going to be very impactful, very, very important, and we just have to wait and see how things end up going. All right. So for the VIX, I just want to say that we have this big gap below to fill. Is the VIX about to come down to fill this gap? If that's the case, it's going to be because the market's going to break out. Or is it going to be the opposite? Is the VIX about to actually break out past the 50 EMA, past 14, start pushing higher? I personally don't know. I really don't know exactly how it's going to go. So just be open minded, just be patient, and we'll be uh, curious to see how it goes. The 10-year treasury yield is looking more bearish. This is actually suggesting the market's going to go higher because we attempted to retest our 50 main, kind of rejected. So this is kind of like a bullish signal. And the dollar index is also sinking a little bit. So we have to give this a little bit more time. Anyways, once again, I appreciate all of you guys. We'll see what happens with the CPI reports. I know that I mentioned in my previous videos that the VIX was showing us that the market could top soon, but I just want to say that right now, I don't really want to solely trade based off that because we're seeing a lot of manipulation right now. Manipulation because of the words of Jerome Powell and also other factors. Jerome Powell easily could have been more hawkish, easily. Okay. And because he's constantly telling us that everything's going to be fine, no worries, this and that, he's telling us that the Fed has everything under control. The Fed is continuing to do their job. He's very confident everything will be fine. And he doesn't really address the full picture, in my opinion. That's honestly how I feel. So, with all these external factors, the market is bullish for now and it's remaining bullish. So, we're just going to trade based off that. So don't worry about the VIX for the time being. Don't worry about the VIX potentially like causing this big little rejection in the markets yet. We're not ready yet. There's no confirmation yet, so we just have to wait and see. Once we get the confirmation, I will let you guys know. But we're not seeing it yet. The VIX is still looking kind of weak, and there is a signal that kind of shows us that the VIX could drop again. So it's not ready for a big bounce yet, and the market's not ready to top yet. The market still looks bullish, so we just have to go based off that for now. Things could change. The VIX could get a breakout if CPI is very hot, but we're not seeing that yet. So we just have to be very patient as a lot of things could shift in the markets, and that's just part of day trading. Sometimes things don't always happen as they have in the past. So just be patient, do what you have to do, guys, and I will see you guys very soon tomorrow morning. Thank you for listening, guys. I try my best to be as unbiased as possible. Once again, I appreciate you, and I'll see you guys very soon. Thank you, and peace out.